So hello everyone, welcome to the panel on what's next in India. I am Manish Singhal. I'll moderate the session. Just a quick background on myself. I am founding partner at Pi Ventures. We are a venture fund started 4.5 years ago. We focus on India, of course, but also we are very focused on the deep tech, and within deep tech, we are actually specialized in artificial intelligence. We do seed investments. We've done 11 investments so far, and very keenly watching the space of not just AI, but other forms of deep tech as well, as they are making their way into the mainstream industries. Today in the session, we have a very interesting panel and also a very interesting topic, right? Because given the scenario that we are living in today, several things are happening. India has always been a land of opportunities, but in the given times, the things that we are seeing changing with COVID around us, recent massive amount of funding that Geo has raised and what that means for the Indian ecosystem, how exits are going to shape up in the coming future, etc., etc. So we're going to talk about a host of different things and see how India is positioned to take advantage of the situation we are in. But before we kick that on, I think it's good to get introduced to all of our speakers today. So I'll ask all three of you to go one by one and introduce yourself. Maybe Anand, we can start with you since your name starts with A.
Thank you, Manish. So I'm Anand Lunia. I am a general partner at India Quotient. We are a seed stage VC firm investing $500,000 to $2 million in primarily paper stage companies in the tech space in India, sector agnostic. Many of our investments have been ahead of time. We currently manage $60 million and have an opportunities fund on top of that. Usually the three general partners, and usually we make 2-3 deals each. You will recognize us by this company called ShareChat, which is positioned to take the place of TikTok in India, popular in the local newspapers.
All right, thank you, Anand. Ruchira, you want to go next?
Sure, Manish. I'm Ruchira Shukla, and I lead the South Asia business for Disruptive Technologies for IFC, which is a division of the World Bank Group. We do direct equity investing in startups as well as venture capital funds. We generally entered startups in their Series B or later stages, although we've done earlier stage investments in markets like Bangladesh and Sri Lanka. And in VC funds, we focus more on the tech-oriented funds that are aligned with our own sector strategy.
Thank you, Ruchira. Sandeep?
Hi, thanks, Manish. I'm a partner at Lightbox. We are managing our third fund currently, which is about a $200 million fund. We invest in tech and tech-enabled businesses. We have a very concentrated approach, so our funds only invest in about 8 companies per cycle, and we continue to look for how tech is going to make a difference and change different industries. So happy to talk more about that as we go.
Sure. Thanks, Sandeep. I think to kick off, right, we probably need to sort of address the elephant in the room, probably in all panel discussions around COVID. So let me just get that out of the way, and then we will talk about other things. So I think we all know how COVID has changed our lives. I think apart from Anand, I think all of us are at home working very differently than what we used to be, and consumer behavior is also changing massively. Portfolio founders have had their own challenges in how to kind of deal with this. So maybe I can bring in Ruchira. You bring in a very interesting perspective, Ruchira, because you not only invest directly but also invest through your funds. So you probably have seen various startups through consumer, through deep tech, etc. So what, in your mind or in your experience, COVID has done for the startups positively and negatively, and how have the founders taken advantage or not taken advantage of this?
Definitely, lots of examples to share, but certain sectors had a lot of tailwind because of COVID. right? Because people realize they just couldn't step out. Markets are closed. You're not safe stepping out to markets or to public transportation or even go out and meet people, right? So that changed the way people did stuff. It changed the way people bought stuff. And the tailwind sectors are definitely e-grocery. So for us, Big Basket saw a surge in its volumes. In fact, they have been delivering an average of over 300,000 orders on a daily basis. And in the month of July, they did over 10 million orders. A similar business that we invested in Bangladesh called Chal Dal is another e-grocery platform, saw a 7x increase in their volumes. Now, we do believe that some of this change that we've seen is fundamental and is here to stay, because people who are first-time transactors on the net and were forced to transact online because they couldn't step out and go to their markets are now going to be here to stay, because they have now gradually become comfortable in this new way of operating. Some of it may slip back, but a large part of it will stay. And I think that has therefore taken India at least 3 to 5 years ahead in the internet transacting sort of curve that we were expecting to see. The other sector which COVID has given a whole tailwind to is health tech. And just like we weren't comfortable going to markets, nobody's comfortable walking into a pharmacy, nobody's comfortable walking into a lab for a test. And things like teleconsultations, e-pharmacy, e-diagnostic marketplaces, all of those are now taking off in a big way. And we have one MG in our portfolio, which we are proud to see has grown very well in the current market circumstance. The other players that did well were those that could pivot well and could use this crisis as an opportunity to reinvent what they were doing. So Bizongo is another B2B player in our portfolio that actually at its core is a B2B packaging marketplace. But they have a number of supplier relationships, about 30,000 suppliers, and they were quickly able to identify those suppliers that could manufacture PPE kits. And they repurposed textile manufacturers for PPE kit manufacturing, and in the last few months have delivered over 250,000 PPE kits. So it actually brought out strengths in management teams when they were managing either a surge in volume because of the tailwind, or they were thinking about how to reorient their business. We also saw some businesses see a lot of headwind, right? Ride hailing, ride sharing, all of those businesses suffered, and we saw that again for similar reasons. Nobody wants to use a shared asset anymore because they're fearful of getting infected. Wherever we saw a drop in top line, management teams had to tighten their belts and think about cost management, and that has made entrepreneurs very focused on being cash conscious, extending their cash runways. Founders have taken salary cuts. Some of them have had to lay off, and that also is a big lesson for people. So in terms of the future, I think people will be a lot more measured in how they grow. And so fundamentally, this crisis has been an opportunity in making people stronger as management teams.
Sure. Thanks, Ruchira. I think one of the takeaways that I'm getting from your answer is that India always had a lot of people, right? We had 1 billion, 1.3 billion people plus. But how many of them transact online, buy online, etc. And COVID has probably given an acceleration to that whole piece in a massive way, which would have taken probably 5 years to get all those folks online. Already people are getting online in massive proportions. And I think that's a good point to bring Anand in. Recently Jio raised almost $15 billion, which was like a massive amount by any yardstick. And with their whole Jio platform, obviously expecting millions of Indians coming online again. So how do you see this whole thing play out for the India market from consumer perspective, from investing perspective, and general ecosystem perspective?
No, that's super, Manish. Last 10 years, right? We saw the formation of Flipkart, and Flipkart eventually the founders exited. Right? We saw the creation of Swiggy. Before that, Make My Trip, and a lot of companies which have global parallels. Right? These are globally successful models which were brought into India. You Ola, Uber, all of these companies. But last 3-4 years, these companies have sort of plateaued. They're not growing at 100-200% a year. Last 3-4 years. Right? Neither are the valuations. They still continue to burn, interestingly, all of these models. but next 10 years, right, will be about not just the top 10% or maybe 5% Indians, maybe 50 million Indians that these companies are catering to. I mean, how many people can afford e-commerce, right? What Jio is doing is at a price point of $2 a month, they're bringing in 500 million Indians to the table. And this will create unique to India opportunities, right? With a very low ARPU. And companies in the next 10 years will have to solve for very low ARPU outputs, right? Maybe ad driven, maybe $1 a month kind of a cost, right? I'll give you an example of a non-startup just to sort of make my point. Hotstar has 300 million subscribers. Right? It's a TV app. Out of 300 million, I think 10 million are paid, but the payment is just $15 a year. That's like $1.50 or less than that a month. Right? Now, as compared to Netflix at $10 plus, right? $10, $12. Similarly, Gmail, for example, enterprises and small businesses had to use Gmail at $12 to $17. I mean, Manish, you are paying, Sandeep is paying the bills for their teams, right? It's reasonably expensive. Gmail for the first time has recently launched a $1.5 a month plan only for India, only new subscribers. We can't, so yeah, you can't go and save money on a Gmail subscription. Yeah? But the point is that, there are so many Indian businesses, including CA firms and legal firms and all, people with 20 people, 50 people don't have a company email ID because it's just too expensive. Right? We need Indian solutions at low ARPU. Ruchira talked about healthcare. Right? Nothing has happened in healthcare because India is a unique country. There are no global companies in healthcare, right? I mean, every Western country, even China, the state provides healthcare, right? Insurance is provided by the state. There is state-provided pension. So financial services are again, savings are all taken by care of the state. Education is a state subject again. So you don't do B2C education, right? Byju's is a unique Indian company because selling to only Indians, right? You will not find global parallels. I think Reliance Jio platforms will spawn a genre of companies which is uniquely Indian and which will not necessarily have a lot of global competition, which is good. I'm looking forward to some capital efficient companies, looking forward to some IPOs. And I think Jio platform lays the not just Jio platforms actually, Manish. We have the entire India stack, including the social security numbers, UPI as a payment ecosystem. I mean, for example, in India, to make a low ARPU work, you also need free payment system, free digital payments, right? Which is what we have. So everything is ready, and new companies are coming out. Dream11, which is an Indian company in the gaming space, actually has done extremely well because low pop, you can actually take a like 50-cent bet or maybe even 10-cent bet, right? And that's the size of the bets you can take, and the company is worth more than a few $1 billion now. And that's what I'm looking forward to with the Jio platform.
Sure. Interesting, actually. So if one has to solve for such a low price point, right? I mean, technology has probably got a very big role to play. Otherwise, businesses will lose money in this whole process.
Yes, you can't throw people at this, right? This is the beauty of it. You have to have a tech solution only.
Yes. Yeah. So Sandeep, since you are a tech-enabled fund, would you have some comments on how technology can play a role in the coming few years and what can it do for India?
Sure. Manish, we definitely don't go at the tech the way you do. And I know you're at the much more frontier edge of it. And I think
absolutely.
that when we look at stuff, we're really looking at the application of it. And I think that, there's different types of risks that you can take in different markets. And I think in general in India, we don't take big technology risks. You are great. I'm so happy to see that there are funds that are actually predicated on finding really deep tech solutions to problems. But reality is we're not one of them. And we instead look at the world and say, okay, do we believe that tech is kind of there? And then is the market evolving? And I think to Anand's point, unique Indian solutions and unique Indian problems are really where we try to find opportunity. Anand's an investor with us and before us even in Rebel Foods. And I think that's a great example of applying tech to an industry that actually, it's not rocket science, the tech. It's just that you saw fragmentation in a food model that they're just not scaled QSRs. Rent ratios are really high in India. Rent to sales ratios are out of whack. Massive failure in restaurants to begin with. And so therefore you see a structure where a cloud kitchen business can emerge. And because of the lack of incumbents in India, that business can scale up. Now what's even more exciting, coming to kind of the idea of things that can be done right and done well, a business like Rebel, the wastage in their business is somewhere between 1 to 2%. The industry average for a restaurant is somewhere between 8 to 10%. So this is where you can start to see that, okay, if I leverage technology effectively, I can make a social difference, which is nice, but actually it's a great P&L difference, which allows you to then have better margins, which allows you to pay back faster, all those great things that come along with that. So I think that COVID, and to Ruchira's earlier point as well, has been an accelerant. And I think it's an accelerant for trends that were already moving. And you see that across verticals. And I think that adoption of tech was a trend that was already happening. And it's, I would say that perhaps two big accelerants that we've seen. One was the millions of dollars of discounts that got poured into e-commerce through 2015, 14, 16, that time frame. And this right now, honestly. And I think that, we'll come out of this and we'll see that there was already a changing of the guard that was happening where, there was a shift among consumers towards being open to and aware of. In the June quarter of last year was the first quarter where smartphones outpaced feature phones in sales. So you saw that, and there was a quarter I remember last year where there was a big talk about Britannia sales were down and FMCG products are not selling at the same levels. And okay, they weren't, but smartphones were still selling. People valued the idea of connectivity and getting access to services, I think, more than a biscuit. And so as a result, you have this shift that's taken place. And I think that that's the opportunity in front of all of us right now. Manish, you'll build the tech that will kind of mature over time. Anand will come in and get it going, and then Ruchira and I can hopefully come help grow them over time. And I think right among here, we have the whole ecosystem.
I'm going to pass on my companies to Sandeep. He's the guy who's making the most money for me. So,
okay, cool. We have a very mutually beneficial ecosystem here, right on the panel.
No, which is a good point, Manish. Just sorry to interject. I think the Indian ecosystem has developed beautifully, Manish, right? Mm-hmm. We are seeing funds collaborating, funds helping each other, and this was sort of evolved into really strong relationships between people over the last 10 years. And I think and people like you are specializing, right? Which is sort of evolution of the ecosystem is happening right now.
True. That's true.
And I would like to add to that, Sandeep, when I talk when I think about people collaborating, the best time to see the collaboration come through is in a time of crisis. And what COVID showed us is how investors got together where they felt the asset was strong, but perhaps this was not the time to get external money because maybe the valuation would not be the best. Given the pinch that COVID did to the business, investors put together bridge rounds. Wherever they thought that this was the right time to extend the runway, right? And wherever they thought there was some kind of convertible required, venture debt came in or convertibles were done. So every instrument was explored to help the companies extend their runway in this time of crisis. And that's what actually, it's like the proof is in the pudding. How do you work together when things are not going so well? And so I think it's more than just collaboration, in good times, is how they've done this through the crisis.
Sure. I actually wanted to bring up one point, right? India has always been criticized for one thing, that we don't have enough exits in the system. And pretty much, money comes in, but hardly money goes out. And compared to the paying capacity, as Anand, you said, that, the ARPUs will go massively low than the rest of the world. Obviously, we can solve with tech to still make the businesses run. But any one of you want to comment on how exits are shaping up currently and how does it look in the next coming decade?
I can start. I can start on it because, it's I think Anand also alluded to the fact that we've been in businesses that have burnt lots of money here. And I think that if you kind of look in general at the market, we've been a very capital inefficient market in terms of how businesses have scaled. And I think that's partially fueled as well by investor appetite and mindset to say, look, if we can grab as much market share as possible, let's grow and we'll work it out and we'll figure it out. And the story kind of played in other markets, namely, let's say China to an extent, where it happened. And I think that as obvious as it may seem, the realization that India is not the US and India is not China has taken some time to kind of dawn upon everyone and realize that, okay, we're going to have to perhaps scale and grow differently. I can tell you that looking at the world today, actually, I'll give you a good example on the other side. We have had businesses that have grown the way, let's say, a logical company could grow in InfoEdge. which we were investors in just prior to the IPO, and then we exited afterwards. But I was talking to them recently, and while we've all talked about Geo and the amount of capital they've raised, InfoEdge did a 200 million QIP over 1 week on Zoom calls. And, they have the capacity to both have created an exit, are extremely well valued, have been able to garner follow-on capital into the business in a time of crisis based on just being really smart, stable executors of a proposition that they've outlined very clearly. So I think that what's going to happen over the coming years is you now have businesses of scale. When InfoEdge went public, they were doing $20 million in revenue. Today, you have companies that are private that are doing north of $100 million in revenue. They just don't have the same unit economics yet. And I think that while like I said, the the 2014-16 boom fueled growth through discounts and losses, I think that the growth that's coming now at this point in time is coming with very solid unit economics. And I think that should position companies over the coming 18 to 24 months to be in a position where they are exceeding their pre-COVID levels, they are growing at healthy rates, and ideally are growing profitably. Because the fundamental premise of tech investing was that if I can invest in the platform once and drive not one transaction, but 100,000 transactions, I get leverage, which means I can grow my earnings exponentially. Now, somehow along the journey of the last 20, 30 years of tech investing globally, that notion of growing earnings has kind of dissipated and said I can grow eyeballs, I can grow GMV, I can grow different topics. But I think slowly we're starting to recognize, and you saw it pre-COVID with the IPOs of a bunch of DTC companies in the US that were very poorly received based on the fact that people just weren't buying into lifetime value of different customers in different segments. So I think that we have bookmarks that we've given out at different points of the year where we say this time it's different. I said it in 2005, I said it in 2015, I said it in 2018. I'm going to say it again. This time it's different. And I do believe that the unit economics combined with the acceleration of adoption and the scale that certain companies have achieved are going to allow for one, IPO to happen, and second, hopefully M&A to take place.
Sure.
One point to add, Manish.
Yeah, please.
Yeah, sorry. Sure.
Now, I was giving a slightly different perspective, an LP's perspective, because we also do invest in VC funds. And, given that our audience might include a lot of LPs, I just wanted to give another thought. Sometimes LPs do, focus rightly on DPI, and VC funds therefore believe that they should show the DPI. But there's a delicate balance there, because sometimes I find that funds that are too focused on showing the DPI because they want the LP to come back in their next fund might prematurely monetize. And India is a market that has slightly longer gestation period than others. So I would advise LPs, and we as LPs think about it as it's a longer term game. Because A, you will have to grab that market, which is not already an online transactor. Then you need to build it into a model that is unit economics positive for all the segments that you're going after. And that takes time, as Sandeep was saying. And yes, it's different this time, it's stronger this time. But in order for that to come through, it will take a good few years. So as LPs, we tell our GPs that exit or monetize when the time is right. Don't do it too soon just because you want to show a DPI, because then you're leaving money on the table. And that's a delicate balance we want them to strike.
Manish, the era of global competition and copying global models where you start an Ola here and Uber will come and compete with you. You start a Flipkart here and Amazon will come and compete with you. That era is probably over. The new models that are coming up now will be more in healthcare, more in education, more in financial services. And these will be reasonably well regulated, reasonably unique to India. And in general, VCs are anyways cognizant about the fact that they have to create value. I think VCs, when I talk around to people, we all want to now create institutions. We want companies which will go to IPO and remain. Nobody is now thinking in terms of, okay, can I burn a lot, grow fast and sell out to somebody? We're not thinking like that. Right? There have been a lot of secondaries also, by the way, right? Which also shows that people are taking a long view, like Ruchira said. And with a long view, you just have to create long-standing institutions, and secondaries will come along, even if IPOs will take time. Right? I do hope, when I talk to other people in Sequoia and Excel, they're all gunning for IPO, right? And that sort of will drive the behavior of how some of these companies will behave probably, once they go past Series C or D. That should change, right? Which is a good sign. I also think that competition intensity is also reducing by the government sort of taking some steps, as we've seen in some sectors, right? Which is good because unnecessarily competitive markets are not necessarily good for returns for VCs, right? It just spoils the economics of the companies.
I think we have a few minutes left in the session, and I have one thought which I would love actually each one of you to comment on, right? The global winds have kind of, for lack of better word, gone anti-China a little bit on the sentiment side, from investment perspective, from doing business perspective. India is a place where there is a lot of tech talent. There is a lot of people out here which can participate in the economy in different ways. I would love each one of you to share your perspective. Are we as Indians poised well to take real good advantage of this situation? And is there a situation to take advantage of, right? So both, probably. In any order, yeah, please.
All right, I'm happy to take it first. So I recently, last year, read the book AI Superpowers by Kai-Fu Lee, and he talked about what China did when they met their moment where they really felt that they were falling behind in the world of AI. And the concerted effort across government, investors, entrepreneurs, to really bridge that gap. And I'm not talking just at a central level, at the municipal level, to facilitate space, connectivity, access, everything. Just insane. And the pace at which they caught up in the field of AI was just shocking. And Manish, this is more your world than mine. But I just imagine that the requirement to be able to really get things going is a massive requirement to really bridge the gap from where we sit today. So as much as I'd like to say that, on some of the more cutting edge or even future forward-looking things, which is where I think it counts more. I mean, look, an e-commerce platform for India, sure, it's nice that we have one, or that if we create our own next health platform, and all these things are important, but these will be fueled by capital that's coming from somewhere or the other, not just necessarily Indian capital. But I think if we're really talking about pure acceleration in tech for the future, I think it's going to be more than just a shift in sentiment away from China. It's going to require a proactive approach from bodies in India. And I think you have many of the ingredients with capital and entrepreneurs, but I think that buy-in on a government level for figuring out how to accelerate that and provide the right background and infrastructure and setup for it will make a big difference. So, but until then, look, I'm hopeful that other capital comes in if Chinese capital dries up, which it should. And unfortunately, now I've been here long enough and I'm old enough, I've seen enough cycles that I appreciate that when one thing goes, another thing comes. And so I'm not that worried about it from our sustenance standpoint. But for us to grow and take advantage, I think a few more things are going to be required.
Sure.
Manish, there is
I
some...
can jump in. Okay, go ahead.
Yeah, please, Ruchira. No,
No, go ahead. Last time I went ahead first. You go ahead this time.
So, I'm hoping that the problems go away, right? Geopolitical problems are not good for business in general. I hope that things get sorted. I would have loved to collaborate with Chinese investors. I've had good experience, a lot of learning. We have a little bit to learn before we start performing. And like Sandeep said, there's a long way to go. This is not necessarily our moment to fill in a gap. This is our moment to realize that we haven't really done enough in India. We need to do a lot more innovation. I do believe that some of the unique to India solutions can be meaningful for other countries which have equally low per capita GDP, like Africa and some of the other countries in the region. But in terms of innovation, we have some ground to cover and a lot to learn.
Sure.
No, I was just going to add to that and say, look, I agree with you, Anand. I think any kind of border tensions or geopolitical issues are not good for the economy and for new businesses or entrepreneurship in general. So we should all wish to go away over time. And I'm optimistic they will. Having said that, I think that, now the world at large knows that India represents a huge opportunity, that the VC ecosystem is robust. The fact that entrepreneurs, through the ups and downs, the highs of 2015, the lows after that, the COVID crisis, have become really seasoned, mature, grounded, and prudent. And because of that, I think good quality companies attract capital from everywhere. There are US investors that I'm seeing coming into our portfolio companies, a whole bunch of European investors coming into our companies, Korean investors coming into our companies. So I don't think that one country pulling back a little bit will really affect us negatively, if as long as we are building solid, path-breaking and lasting businesses. So I remain very optimistic, and I also remain optimistic that this sort of position we are in is temporary. It will go away, and in the meantime, we'll just keep growing for the better.
Sure.
Hey, Manish, what do you think?
Yeah. All right. Yeah. I think I actually think and I have to tell you a little anecdote to answer that question. When COVID struck, probably in March, April, I was actually fairly depressed. I thought, oh man, what to do? Can't go to office, can't travel, can't meet entrepreneurs, what to do? And my wife said that this could potentially be the best thing that could happen to you. I said, what? I didn't realize it at that time. But as time is going by, I'm realizing that actually, indeed, this is an opportunity, not a threat in some sense. Obviously, changes come and we need to take advantage of that. But there are multiple things that have happened. I think this is the best, as I've said it many times, COVID is probably the best freemium opportunity that any business could have launched for an online consumer business, right? People are trying all kinds of things. People are coming online. People have unlocked many more hours in their day. They are working from home. They are spending time with their family, etc., etc. There are obviously, if you get stuck in the past and don't change, then there is a problem. But if you're willing to move with times and see, all of our companies have done something fundamentally different in some cases and fundamentally more in some other cases where the trend was supporting. So overall, I just feel that this is a great for entrepreneurs and investors like us to really, and as a nation actually in India, I think we are well poised to actually take advantage of the situation we are in. And totally agree with you that the geopolitical tension is never good for the business. So I hope it goes away and we can partner with China rather than take advantage of the anti-China sentiment. Overall, I just think that it's a great time to be an entrepreneur and therefore a great time to be an investor as well.